Last question here, just to kind of wrap up on kind of process and how you think about, you wrote about pod one revenues in the early look today. How do you kind of think about that within your process and how that kind of sets up for what we're looking at today specifically?
We have institutional clients that only do macro. We have institutional clients that don't do macro, but use us because they need some macro. It's all sorts. But I would, I don't have to guess. I mean, the feedback that I get in meetings on this question is, oh, this completely makes sense. Now, the pods, again, pod one, there are 3 pods. We'll really only focus this, just due to the time constraint here, on the first 2 pods. So pod 1 equals the rate of change of revenues, okay? Pod 2, rate of change of, let's use earnings, or you could use cash flow, EBITDA, use free cash flow on pod 3, which is the rate of change of free cash flow, okay? What are you doing? What are you doing with your capital? Now, on these 2 things, when the rate of change goes negative, if you're a growth company and the rate of change of pod 1 decelerates, the stock's already going down before that happens because people have inside information and already knew that, right? Insiders are selling, it's already happening. The Microsoft guys that sold higher sold to you. They're in the business of selling you stock, don't forget, a lot of these people. So this, similarly, if you take the similar set and you say, okay, if you could have told me from July, which is what I had wrong last year, I had no idea about AI. I mean, all the smart people did, but not me. I didn't know that it was going to do that until NVIDIA's signal said, oh yeah, it is doing that. If pod 1 goes up, if your revenues accelerate and your cash flows accelerate, your stock goes up. There's no top on that until, again, the prevailing conditions change. So again, this I learned 24 years ago, because that's all we would do at what was Dawson Sandberg, then Dawson Giamalva, then Dawson Herman, and then it was just me and Harry, doing it at Falcon Henge on our own. The pod 1, pod 2 rates of change is a methodology that not everybody uses, but it's easy to understand. And what's even harder for people to do is to stay disciplined with that. Like, that's all I care about. You can listen to the call this morning. Felix was talking about how Microsoft's a leader, and I'm in my head, I'm like, no shit, they're the leader. I mean, they got trillions in market cap. Leader, good, great company, nice management team. I like their products. That has nothing to do with the pods. The rates of change are an empirical fact. And if you can front run those consistently, you will consistently run not just a little hedge fund, a major hedge fund. Look at what Harry's doing now. I mean, he's the CIO of 0.72. This is what real people do, okay? What's on TV and what the old wall talks about, that's why they're on TV and on the old wall, right? That's why there's only one Hedgeye. People are like, well, why are you on TV? Well, I want to be the only one who created something like this alongside my teammates. I love this. That's why I do this. But there is this entire dialogue of like, what is Telecom Tom pushing? Oh, well, I like it. He's always bullish. I mean, he'll be bullish into every quad 4 and therefore pod 1 slowdown, all of them. That's why we call him Telecom Tom. He got blown out as a telecom analyst. So that's over there. Just let them do that over there. And we're going to do that over here. And this gave birth, of course, to the quads. Instead of revenues, we do GDP. Instead of earnings, we do inflation. So those are, again, the two primary factors that we're modeling in rate of change. Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.